Today's slew of data does offer a good snapshot of the current state of the U.S. economy. So what is the message? Steve Leisman joins us now with more. Steve?
Yeah, Kelly, the overall takeaway from all of this data, consumers and businesses continue to spend despite a persistent and high and rising inflation report that we got this morning. Let's take a look at a day in a life. Let's do Roger Ebert, thumbs up and thumbs down. Consumer spending, hey, pretty good, 1.3% above expectations. Income, pretty solid, 0.5%, but take away inflation, that's negative. Business investment, 0.6%. And jobless claims, lowest weekly number since 1969, highlighting the tight jobs market we have there. But there is a thumbs down portion. You got to start with inflation. Year over year of 4.1%, highest numbers we've had since 1990. The Fed outlook for rate hikes now 57% for May. That's one of the highest numbers we've seen, as Mary Daly, a dove on the committee, kind of throwing in the towel and saying she expects rate hikes next year. Finally, consumer sentiment, which is interesting that it's down, but spending remains up. People are spending, even though maybe they're in a lousy mood to do so. Leading to the holidays, though, want to lead on a positive note. Two numbers standing out to me. Motor vehicles and parts orders up 4.8%. Hopefully, this is the start of clearing that bottleneck, which has led to high car prices. And second, wages up 1% on the month inside the income report. That is keeping with inflation and then some. So good news going into the holiday on that one, Kelly.
You know, if we just take jobless claims at super low levels and GDP, which by estimates is showing the fourth quarter really, really strong, what is that telling you, Steve? I mean, does that give us a lot of firepower going into next year? Or do we have to wait and see if it shakes out as strong as it looks right now?
You know, I think for sure the third quarter was a swoon that was more related to Delta, also related to the idea that the economy wasn't fully opened. Look, I want to say that if we can get past this winter with a modest increase in the virus spreading around, that we should be firing on all cylinders. The numbers so far are, as you say, very strong. And I do think that we tend to maybe say, hey, we have this inflation problem, but not look at the other side of the ledger, which is we have strong growth and strong job growth. And if this inflation problem does ease off, which I'm suspecting it should begin to do beginning maybe even early next year as we solve these supply bottleneck issues, then the strong growth should become the main story for the markets.
That would be a great outcome. I think that's what our next guest wants to talk about. Steve, thanks so much. It's great to see you. We appreciate it.